Hi everybody, my name is Mary Redmond and I'm talking about the pound-dollar pair now. I still like the pound-dollar pair to the downside now because it did make an important break below this upward trending line here this week, and it also broke below its 50-day moving average, which seems to correlate to this this upward trend. And you've got a bearish cross here. You've also got the delta pattern, which indicates that an intermediate term top is probably in at the 6740 level, and we may have our one here, in which case we'd be going down for probably a week from Monday. And of course this depends on a lot of different factors, including the meeting of the European finance ministers this week. The pound frequently moves down when the risk appetite is lower in the market, and we've had a series of economic reports out of the UK which shows some troubling news that indicate that the economy there might be headed towards a slight rout of stagflation, which is what economists call slowing growth or even contraction combined with high inflation. So it really puts the Bank of England in a tough position, and Mr. King has repeatedly been quoted as saying over the last several weeks that higher interest rates are going to make the debt situation, the long-term debt situation, much worse. And since the UK economy is expanding, but only slowly, only at a rate of around 0.5%, and their industrial production numbers were slightly weaker than expected. The housing prices showed a year-over-year decline of 3.7%. Nobody really knows, and that's one of the reasons why the pound is so volatile. Nobody really knows when they're going to raise rates, but in the next 12 months, the markets are expecting rate hikes from the BOE. But I mean, that doesn't mean that the pound can't go down to $1.50 before then. So I just think that we're going to be in an opportunity for the next couple of weeks to make money on the short side of the pound. And we've got news coming out this week. On Tuesday, there's the Consumer Price Index coming out. That's going to be the critical one to watch, because if it does show a higher number than is expected, it may already be priced into the market, because the Bank of England inflation report did say that they do expect to see inflation in the 4 to 5% range this year. So, on the other hand, if the CPI comes in lower than expected, you could see a real move down in the pound. And the advantage of the pound is when this pair moves, the pound dollar, it really moves. It has a tremendous amount of volatility, which increases the risk, but it also increases the potential for profit. And then there's the Bank of England meeting minutes, and that's going to be important because you could see a shift. Mr. King is obviously not the only voting member, and if the decision shifts from being a 6-3 decision to keep rates on hold to a 5-4, then we probably could be getting a lot closer to a rate hike, so that could cause a temporary bump in the pound. But the pound is also impacted by what goes on in the EU. Even though they don't use the euro as their own currency and they don't have to contribute to the Financial Stability Fund, they're still going to be impacted to a degree by what's going on. And this is going to be a very event-driven news week, because you're going to have the meeting of the European financial ministers. They'll probably come out with some type of a statement on Monday or Tuesday. And there's a lot of political problems going on there, because the taxpayers from the bigger states are obviously getting sick of funding all these bailouts. And there's just a continual news releases every day of somebody threatening to leave the Eurozone, or some of these countries saying that they're not going along with these austerity measures. So, when the market starts selling off on that type of news, then it indicates that fear is increasing. And one of the worst things that could happen is if some of these people such as Mr. Trichet or the EU finance ministers say something, and then as if it's not going to happen, like there's not going to be any restructuring in Greece, and then there is a restructuring. So if they start to lose some credibility with that, we're probably going to see a big sell-off in the euro, and that may affect the pound dollar to a degree. So I do favor the downside in this particular pair in the coming week, and if it were to make a bounce up towards this line again, which might be the 62.50, 63 level, I think that would be a good opportunity to take a short position in the pound.